So the flip side is people start cutting rates, you start easing conditions, bond yields start to fall everywhere, the dollar starts to fall. That
The
eases up.
dollar's in a bear market now.
That's
I
right.
mean, it just kicked off a few weeks ago.
That's right. Now it means it eases financial conditions for everybody. That drives the business cycle. As the business cycle picks up, people have more earnings, they invest stuff, markets go up, and that pattern has always gone on, the business cycle.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul delves into the future of cryptocurrency, envisioning a $100 trillion industry by 2032. They explore beyond the well-known cryptocurrencies like Bitcoin and Ethereum, shedding light on the untapped potential of low-float tokens and the transformative power of blockchain in reshaping economic design and value creation. Tusha Jain, interviewed by her friend, highlights the potential of blockchain technology in coordinating token economic design and capturing value. She specifically focuses on the productive assets of the decentralized finance, DeFi, sector, and the Solana platform. According to Raoul Pal's prediction, the cryptocurrency industry is expected to grow significantly from $2 trillion to $100 trillion by 2032. He emphasized the need to explore opportunities beyond Bitcoin, Ethereum, and Solana in order to take advantage of this boom. He highlighted the ability of hedge funds to discover alpha and effectively manage risks. A friend mentioned that hedge funds have money at stake and need to prioritize returns based on risk. He also discussed the behavioral economics of token value and network effects, suggesting that there is still much to learn about them. Raoul Pal identified low-float tokens as an opportunity, citing their well-known potential. With an expert's eye for financial analysis, he foresees significant growth and a potential value creation of over $50 trillion, surpassing even Bitcoin. And lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel, Everyday Finance. Thanks.
Yeah, so very simply, something I call the everything code is from 2008, we had a global debt reset. Now, as opposed to letting go of all the debts, what they did was cut interest rates to zero and said nobody needs to pay interest rates. Okay, that was a huge advantage for the system, and everybody reset their debts for this 3 to 5 year sector. So then the debt refi cycle, when they have to refinance the interest payments and the debts, drive the business cycle. The business cycle's always been the credit cycle. So now it's become almost perfectly 4 years. The only other time in history it was perfect like this was back in the 50s and 60s after World War II and the financial repression then. So there's financial repression going on, but it goes in this 4 year cycle. The 4 year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto, plus the macro tailwind of debasement of currency and the cycle. So that's where we are in the cycle now. Zoning into election year. Well, this is when they start giving out money. They also have a lot of refi to do. So it tends to be a very good back end of the election year. And then the following year tends to be very, very strong too. But this is a global thing as well. Every major central bank is refining their debts in the same cycle. The Europeans, the Japanese, the Canadians, the Brits, and the Chinese. Now, what you always look for in these refi cycles is who's the weakest link, because they're likely the ones to do the most stimulus. It's probably China this time around. Just came on the tapes just now. I think Felix actually just tweeted it out. There was a Bloomberg story that I've been talking about for a while, is the US and China have agreed to kind of help each other. So we know the Chinese need to stimulate.
What did they say?
Well, they've said, let me see if I can find the exact tweet.
Felix?
It said, it was exactly what I've been writing about in GMI. They said, China's central bank says a meeting in Shanghai produced an agreement with the US Treasury to appoint contact people to deal with any future financial stress events.
The price of Bitcoin has been moving within a narrow range for nearly a week as traders analyze various market signals. These signals include the possibility of a significant amount of Bitcoin being sold by the US government and the defunct crypto exchange Mt. Gox. Since August 28th, the price of BTC has been fluctuating between $60,000 and $57,000, with $60,200 acting as resistance and $57,300 as support. This indicates that traders are uncertain about the market's next direction. One of the main factors contributing to this uncertainty is the mixed fundamental signals from the market. On the bearish side, the US government and Mt. Gox are planning to introduce an additional supply of 249,000 BTC, equivalent to $14.53 billion in September. If the market struggles to absorb this new supply, it could put downward pressure on the price. Conversely, on the bullish side, the upcoming US Federal Reserve meeting on September 19th could serve as a catalyst for the market. Should the Fed decide to lower interest rates, it may potentially boost the demand for assets such as Bitcoin, which do not generate yields. This conflicting information, with an increase in supply and the potential for heightened demand, is a key factor in the ongoing standoff between Bitcoin enthusiasts and skeptics. Bitcoin's price seems to be stagnant as the market has reached a state of balance in terms of investor profitability, as indicated by Glassnode. For those unfamiliar with the concept, this is known as the market value to realized value ratio. The MVRV ratio metric is a valuable tool for evaluating investors' average unrealized profits over a 2-week period. Recently, it has remained close to its long-term average of 1.72. This level has historically indicated a transition between bullish and bearish market trends. When the MVRV ratio hovers around this level, it suggests that market sentiment is neutral, with no strong bullish or bearish momentum. In simpler terms, investors are less inclined to make significant buying or selling decisions, as the potential for substantial gains or losses is diminished. This often leads to a period of consolidation and price stagnation. Let's back to the Raoul Pal interview.
Right.
And it's all dollar debts. Right, so they've got a dollar shortage, and what they're basically saying here is the Fed will get dollars to them. I think this is one of the reasons what Japan has been doing in the yen as well, because the euro-dollar market is driven through the Japanese banks.
I'm not, the whole Raoul's explanation of the cycle is a little more scientific than my own, but it's very similar. But Raoul, do you remember, look, it used to be for many, many years that every time the Fed tightened, the dollar rallied a lot. And then what happened was that the tightness of monetary policy got transferred around the world, and the weakest link would blow up.
Always.
I think what just happened with China is the Fed blew up China, right? It's not such a bad thing that we can control what happens over there with our interest rates. But the reality is the dollar went up a lot against the yen, a lot. And it didn't go up quite as much against the dollar. The dollar didn't go up quite as much against the RMB because there's a peg, quasi-dirty peg going on there. So Japan and the rest of Asia just devalued massively against China, right? So that hurt China. Also, dollars becoming more expensive, pressured, the leverage player out there. And that's China. The real estate sector is still ridiculously levered. So it's pretty much the same thing that we've always seen, Raoul. I mean, it was, all of these crises over the years. And it's largely because China does not have a floating currency. They're not big boys. They try to be big boys. They say they're big boys on the global stage, but they don't even manage their own currency. It's kind of a joke a little bit. The peg is left over from before when they were communists. And they never really adjusted. So they don't have a free-floating currency. It's not quite like the Arabs, who are completely pegged to the dollar. Saudi, and all the Middle Eastern currencies. There's a complete peg there. But it's kind of funny. China's a $20 trillion economy, and it doesn't have, can't manage its own currency. So as a result, they don't have their own monetary policy. And so, I mean, I think rates there probably are going back to zero, Raoul, don't you think? I mean,
I was looking at
2 or something, right?
Yeah, I mean, I was looking at the 10-year bond rate, which is actually a big influence on the crypto price, bizarrely. And 10-year yields in China are at like 2.1% or something, and they just look like they're going to approximately zero. And we know this because this is the Japan playbook, right? When you've got an aging population aging as fast as that, you've actually lost control of your growth engine. So the natural rate of interest rates has to be much lower. And it shows you've got a debt crisis.
Yeah, and I think that took the edge off of the inflation bump here because China has been, deflating, or let's just say in trouble for over a year. So I think that helped also sort of works in a feedback loop, right? The Fed, they tightened, it forced a slowdown there, and then that slowdown there helped take the edge off of the inflation.
And what we're seeing now is the flip side of everything that Dan's saying. So the flip side is people start cutting rates, you start easing conditions, bond yields start to fall everywhere, the dollar starts to fall. That eases
the dollar's in a bear market now.
That's right.
I mean, it just kicked off a few weeks ago.
That's right. Now it means it eases financial conditions for everybody. That drives the business cycle. As the business cycle picks up, people have more earnings, they invest stuff, markets go up, and that pattern has always gone on, the business cycle.
Bitcoin's price has been moving sideways lately, which aligns with the decrease in open interest, OI, and funding rates in the futures market. The OI dropped from over $30 billion to around $29.4 billion between August 28th and September 2nd, while the funding rates of Bitcoin fluctuated between positive and negative levels during the same period, calculated every 8 hours. The decrease in open interest indicates a lack of confidence among traders as they are opening fewer new contracts. This reflects a cautious approach where market participants are hesitant to take new positions due to the absence of clear momentum. Meanwhile, Bitcoin's funding rates are fluctuating between positive and negative levels, indicating no strong preference for long or short positions in the futures market. Therefore, the combination of declining open interest and unstable funding rates reinforces the notion that the market is uncertain. Traders are probably waiting on the sidelines for a clear catalyst that will drive the price towards a definitive correction. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.